Good morning, everybody. We've got a mixed trade in the grain markets here early on Wednesday morning. It is 6:32 a.m. Central Time. We have December corn futures down 1 3/4 at 363. November soybeans are down 2 at 991. December Chicago wheat up 8 cents at 557.5. December Kansas City wheat up 7 3/4 at 483 3/4. December spring wheat is up 7 at 531.5. We have a USDA report today. This is the quarterly grain stocks report. It will be out at 11 o'clock Central Time. This is essentially an old crop report. It's going to provide us with the stocks for corn, soybeans, and wheat as of September 1st. For corn and soybeans, that means that this is essentially your old crop ending stocks numbers. The trade expects September 1st corn stocks to be the largest since 2017, I believe, at about 2.2 billion bushels. Soybean stocks are expected to be down 37% from last year. Now, keep in mind, last year we were north of 900 million. We're expected to be closer to 576 million here this morning. Wheat stocks are expected to be down 4.5% from last year. This report does have a tendency to result in some volatility in the markets, so be prepared for a little bit of movement around 11 a.m. Central Time. U.S. weather forecasts remain very dry, really. The harvest window is going to be wide open here for at least 2 weeks. Almost the entire Corn Belt will see less than a quarter inch of rain during the next 7 days. And even when you go out through the second week of October, you're looking at a total of 1 inch or less really for the entire Corn Belt. So things should move pretty quickly here, barring some big change in the forecast. EIA will release weekly ethanol data later this morning. We've kind of stagnated here in recent weeks. Ethanol production is still running at what I would call pre-virus levels. The 4-week rolling average for U.S. ethanol production was 7.3% below the same week last year. As of last week, gasoline demand is still running 5 to 10% below last year. So still not a great situation there. And we really need to see a recovery because that is just such a tremendous portion of your demand base for corn. We have not seen a flash sale of U.S. soybeans to China since September 23rd. Mexico made a small soybean purchase yesterday. The Chinese will be on holiday during the first week of October. Despite the lack of sales during the last week, China has bought more soybeans for this 2020-2021 marketing year. They bought more soybeans for this year than any other year on record. So despite the lack of sales here recently, they've still got a real strong book of export sales. Fund traders continue to hold a hefty net long position in the soybean market. Private groups estimating funds to be net long 186,000 contracts at yesterday's close. The fund long peaked. If you're looking at the estimates from the private groups, the fund long in the bean market peaked at about 235,000 on September 18th. So they've peeled some of it back, but still at 186,000. That's a hefty long position still. Private groups estimating that funds were long 71,000 contracts of corn and 7,000 contracts of SRW wheat at yesterday's close. I put some charts in my newsletter this morning regarding the soybean market and the lack of carry in the soybean market. There's really very little difference in price between, say, your nearby November and January contracts versus your deferred, your March, your May, your July 21 contracts. So if you're a farmer, let's say you've got some HTAs or some existing futures contracts, there's really not any incentive, in my opinion, to roll those contracts forward. This is not last year. Last year, farmers were able to take their November HTAs or short futures contracts and roll them out to July and pick up, I think, 40 or 50 cents of carry at one point in time. This year, that opportunity does not exist. So it's for that reason that I believe a lot of farmers will opt to sell or deliver soybeans at harvest or right out of the field this year because of that lack of carry. The corn market's a little bit different. We have 19 cents of carry from December out to next July, and that spread's widened a little bit. I'd like to see that thing at 25 or 30 cents at least prior to rolling HTAs or short futures. We did have that opportunity a while back, and on this rally, they've taken some carry out of the market, but it could very well come back into the market, especially if the market were to drift lower here. The corn market itself has kind of just been hovering sideways the last 3 or 4 sessions. We've held some trend support on the charts, but at the same time, we haven't been able to hold a rally. One thing about these reports with corn stocks in particular is that you cannot really track feed demand, and that's one of the things that is often a surprise in these reports. You're able to track exports and ethanol on a weekly basis because we have weekly reports. There is not a data item like that exists for feed demand, so it's difficult to gauge, and that's why sometimes the trade misses these corn stocks. Soybean market, again, I think harvest pressure is an issue. Because of what I talked about in the spreads, because I think a lot of farmers will opt to sell or deliver beans at harvest. Fund traders aren't running for the exits, though. Again, still a pretty hefty net long there. The wheat market is sharply higher this morning. I'd like to see this wheat get back up to where it peaked back in maybe mid-September. I know that the nearby December HRW contract traded up to 509 in mid-September. There's a lot of carry in that market, so you get a rally, and there may be some nice deferred pricing opportunities there because we've got so much carry in the market. Cattle market had a really nice day yesterday. Fat cattle up about $1 across the board, really. Feeder cattle futures were up more than $2 in a lot of your nearby contracts. The box beef market was mixed. Feeder cattle index was up. We'll see if we can improve on this cash trade here this week. Ahead of the cash open, the Dow Jones is down 178 points. The S&P is down 18. The bonds are down a little bit. U.S. dollar is up a little bit. Crude oil is down 26 cents at 39.03. Gold's down $10. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan, check out my subscription service. For those of you watching on YouTube this morning, I promise my audio quality will be much, much better later in the week. I'm waiting on a new microphone, so it'll be much better come Friday or Monday at the very latest. Everyone have a great day. We'll talk to you same time tomorrow.